Hi everybody. I wanted to go over this chapter where we're talking about what is fundamental investing, and I wanted to use a case example of Facebook. And what I want to do here is basically this class is about merging the accounting with the finance as we go into making financial decision and doing financial analysis. And I know you guys are looking at some of the slides in the book, and I want to give you something that I want to work with you is how to go looking at market data versus how to look at accounting data. And this is kind of like a merging of the two. It's kind of an interplay of the two that we're going to work with in this course. So what I wanted to go over first is, say we're talking about Facebook. And what I did was I'm looking at Facebook here online, and I wanted to correlate some of the things that I'm seeing on Yahoo online to some of the things that I downloaded an Excel sheet from their annual report, and I went through the actual data. So what I want you to do is go on their website and download their annual report, download their financial statements of 2014 in Excel, and go through this exercise with me. And I think this will really explain what is it that we're talking about in the book. So for example, say I just want to recalculate their price earnings ratio. You know, this stock's trading at $89, and the first question is $91. So the first question is, what does that even mean? What does that even mean accounting wise? Well, we start with what is their market cap. That is the value of the entire company, right? And that is based on outstanding shares times this price, right? This is the value of the outstanding equity of this company, right? And in financial statements, you know, this is their latest balance sheet as of just a couple of months ago, and I can see here stockholders' equity is about 39 billion, right? So you know, I've always been confused about this as I was learning accounting and finance. Is like, why is the equity on the balance sheet, the accounting balance sheet is 39 billion, and these guys on Yahoo are telling me this thing is worth 256 billion, right? So this is the idea of what are we trying to work with. So this comes from this fact that the price earning ratio is 92.49 here. So part of the job is to decipher what does that even mean. So I went ahead and said, hey, well, if the market cap of this thing is 256 billion, and we can say 256 billion. I was sort of going back a little bit and testing it. 256 billion. What are their earnings, right? Their earnings, we see as per this income statement, net income is $2.9 billion. So price earnings is the total value of the company divided by what? Just by their earnings. So that's how you see it. You start seeing, hey, listen, this thing is valued quite a bit. In fact, 87 times more than they're earning now. So that's where we start. Another way of looking at this company between accounting and finance is to say you look at the market cap and you say, okay, market cap 256 billion. What is the price per book? Well, the book value, what's book value, is actually the same market cap. What are they trading at? Divided by total stockholders' equity. Total stockholders' equity is the book value of this company. So you kind of see that, hey, the book value of this company is 6.49 times its the price of this company is 6.49 times its book value. Why is it important to know how much is it worth compared to the book value? And it's just telling you, hey, I'm looking at their balance sheet, I'm looking at these guys' assets, right? And I have these assets here, cash, marketable securities, accounts receivable, property, plant, and equipment, intangible, goodwill, other assets. You have about $44 billion worth of assets, right? Um, the idea is the market is saying, hey, listen, these assets are worth to the market minus liabilities, but there's very little liabilities, only 1.8 billion liabilities. And the idea is the market is saying, no, these assets are worth 256 billion, not about 42 billion or whatever the net equity is. Why is that? Because we're talking about, hey, there's much more value than is seen on the accounting balance sheet. And this is kind of, we're going back and forth, accounting and finance, accounting and finance. And this is what we're starting to do in this first chapter, is just delve into it and kind of look at all these items. And what I want you to do is go ahead, look at the Facebook key items here in terms of their page on Yahoo Finance, right? And then also look at key statistics, and you can look at these and say, hey, what's the market cap? You see the market cap. What's the trailing PE ratio? Recalculated using the financial statements. What's the forward PE ratio, right? What's the price to sales ratio? What's the price to book ratio? These are the ones where I want you to grab an Excel sheet and recalculate them. And this is what we'll work with leading up to the first project, which we'll work together on. It will be on Facebook. So the idea is that I want you to go also into analyst estimates and assess, hey, what does it mean that they're going to make 207 per share by December 15th for a whole year, or 2.75 by December 16th of next year? So what does that mean in terms of total earnings? What does that mean in terms of the income statement? And what does that mean in terms of the PE ratio? So those are the type of things where I want you to build out a spreadsheet and put all these items together. And I will be doing the same and sort of showing you some of these things and comparing with yours. And then eventually you can use yours, and I will want to review it. I'm really excited about having you in this course. Let me know if you have any questions, and I look forward to being in touch.